What's your own sense from what Fatih Birol had to say about how strong the China rebound could be?
Great to be back, and thanks for having me here. Look, this has been the constant refrain of the IEA. To some extent, I'm not surprised. The IEA always talks a story of plenty of demand and perhaps not enough supply to meet that demand. But I think the markets at large, and certainly OPEC Plus as well, is probably going to agree with Mr. Birol that, yes, China's reopening, demand is coming back, but a lot of question marks as to what pace it comes back. And I think the oil market is basically looking for some tangible signs of that old Chinese appetite, as in pre-COVID appetite, and it's not gotten those signs yet.
When do you think that those signs will be clear?
A big question, Tanveer. Personally, I'm expecting sometime in Q2, but I think we need to be careful when we lay out our assessment of Chinese reopening and demand rebound. So I think there's going to be an initial rebound. I think there's plenty of signs we are already seeing in high-frequency mobility data, because clearly after 3 years, the Chinese citizens are traveling, and there's travel back and forth overseas as well as in the domestic market. So there is an initial bout of rebound, which was to be expected. I think the big challenge for the oil market is at what point it turns into a sustained growth, and growth that takes Chinese demand beyond what it consumed in 2022.
But is that inherently possible, because you have a continued surge of EV take-up? And I know we're talking about the edges or the margins when you're talking about just the EV ramp-up, but even still, that is a subset that continues to grow at an incredibly rapid clip. So can we ever get back to those same levels? Because if you're thinking on a comp-on-comp basis, it's a very different amount of cars that are on the road that use ICE instead of using EVs. So do we get to 2020 just things are the way they are? Yeah,
so absolutely. That's part of the, I would say, a slightly medium to longer term challenge in trying to map out Chinese oil demand. Chinese oil intensity for GDP has been declining for several years. So that's a pre-COVID phenomenon. But this year might be different from that trend, because we know that, first of all, there's going to be a revenge spending or what have you, right? And second, we know, and we'll see next month with the government expected to announce more fiscal and monetary stimulus. So actually, China is in those terms, actually going very differently from the rest of the world. The government is going to make more easy money available. So, this year, again, I would say is probably going to be not quite in that pattern of pre-COVID. So we could see quite a smart rebound. And then China has to recover at least 500,000 barrels per day of oil demand that disappeared in 2022. So that has to, and that is quite a substantial amount of oil demand to come back.